So, Chris, I guess my first question is, how bad will it be for these banks?
The key toggle in credit, Dom, is unemployment. The second factor is what's going on with business, and we have a lot of small and medium enterprises that are going through a difficult time. I think we've wiped out a third, maybe half of the services sector. It's just not going to come back. So when you factor that into the analysis, what I've done is I doubled provisions this quarter, and I doubled provisions next quarter to get us up to 2008, 2009 levels, and then we'll see. But I think the unemployment numbers are going to be worse than 2008.
So Chris, let me just stop you there and pause for a second. When you say provisions, what you're saying, in essence, is that these banks will have to reserve or allot for bigger credit losses down the line because of the credit risk associated with businesses not being able to pay or consumers borrowing and not being able to pay. So what exactly besides that is going to be the biggest driving factor behind bank performance in the coming months?
Well, after unemployment and business failures, I think you have to look at interest rates. Lower rates are not necessarily helping overall earnings for banks because the yield on assets has been falling faster than the cost of funds. So I think there are a variety of factors that are going to come into play. You're going to have a big operational load on banks and non-banks as well as they deal with all of this. They're going to have to scale up their ability to deal with customers. They normally keep that cost very tightly under wraps, Dom. But in this case, mortgages, for example, they're going to have to double headcount in the next 12 months just to deal with managing assets that are in forbearance or the default or who knows.
All right, so let's take us through. I mean, there's a large universe of different types of banks out there. The big money centers, the ones with large capital markets activities, the regional banks more exposed to perhaps construction and lending. So where exactly are we looking with regard to where the real outperformers could be and where the real underperformers could be in this kind of environment?
I think the banks with the larger consumer exposures are going to be most suspect. So Citi, Capital One come to mind. The large banks, JPMorgan, Wells, Bank of America, are going to have a very broad range of issues that they have to deal with because they have very broad portfolios. And then you look at Goldman Sachs, primarily trading capital markets exposure. In that case, the volumes are down, and they're going to be, I think, struggling to find new business in this environment because nobody's doing anything. In the bond market, really, the agency sector, treasuries, mortgage-backed securities with government guarantees are really the only thing that's liquid today, Tom. Everything else is looking for a bid. So I think that overall the consumer names are going to be under more scrutiny than the banks that have more institutional focus.
All right, Chris, just a couple of moments left here. Let's talk a little bit about previewing some of the capital markets banks out there, the Goldmans, Morgan Stanleys of the world. Some of the conventional wisdom is market volatility is good for these guys. Is that going to be the case this time around?
Well, it could be in theory. I mean, look at JPMorgan. They managed their duration exposure very nicely. They've made money on all these bond rallies. I think the same applies with Morgan Stanley, big program trading house. But with the risk comes the potential and the risk and the reward. You have to see how they position themselves. And in this kind of volatility, it's very difficult to make a rational decision about direction. The most successful traders I know, Dom, don't do that. They trade the spreads. So, that's what I'm looking for, especially Morgan Stanley. They really got beaten up in the end of March. Their credit default spreads were over 200 basis points over the curve, which was twice the other group. So I'm looking to see what's been going on in Morgan Stanley.